Hey guys, welcome back to the channel where we talk about the joys of stock market investing and long-term dividend gain. If it's your first time stopping by the channel, hit that subscribe button. Trust me, you won't regret it. If you're a returning subscriber, guys, welcome back. Quick disclaimer, I don't have a WhatsApp, so if you see that in the comment with my face on it, it's a scammer. It's not me. I won't ask you to call some crazy number because I got a special deal for you or, give you stock tips. That's not my thing. But I just wanted to get that out there. That's not me. It's a scammer. Anyway, let's get into the video. Guys, today I made a small purchase in a stock that is perceivably overvalued. In fact, it is overvalued. I know it's overvalued. The company is Caterpillar. The ticker symbol is CAT. Who is Caterpillar? A lot of you guys know. Some of you guys that are new to investing might not know. Caterpillar is basically a bulldozer company. They manufacture and sell construction and mining equipment. A lot of stuff you see on the road, like road graders and bulldozers. I don't know if they call it steam shovels nowadays, but all of the heavy construction equipment that are used to build buildings, pave roads, do a lot of the infrastructure is what I brought into today, and that's Caterpillar. It's one of, if not the biggest company that deals in this type of sector, and the sector that it's in is industrial. Now, in addition to making these heavy equipment vehicles, they also make diesel and natural gas engines, and also industrial gas turbines. So that's just, that's just a little bit about what they do and what they're about. We're getting to the overvalued. At presently, I brought in at $233, which is 20% over the quoted intrinsic value of the stock. And I think they have it around $199. But to me, a lot of people say, hey, you don't buy stocks that are overvalued. Everybody's situation is different. Everybody's investment strategy is different. As for me, I'm a long-term dividend investor. This is one of the stocks I was supposed to buy in January of 2020, and I missed out. For some odd reason, I didn't pull the trigger on the deal. But the stock, guys, at that time, was trading at, $89 a share. And it's usually, way higher than that. But I don't know why I didn't pull the trigger on that. And it's like one of those things, like, as an investor, we all, like, kick ourselves later on some type of deal. And this Caterpillar deal was one of those deals. I mean, I had a lot of capital at that time. I could have made a significant jump into this, but I just, for some reason, guys, I didn't do it. And maybe it'll get back to that price someday. We don't know. But one of the reasons why I brought into it now, when it's being overvalued, I'll give you a little bit of particulars. It beat the last 4 earnings call. That's why it's on a tear. The last earnings call it smashed it. And I mean, the stock just skyrocketed, And a lot of people say, hey, don't ride the hype and anything like that. This is not a hype stock. This is a bona fide blue chip stock, period. It's something that's in demand, something that's going to always be in demand. Things are always getting tore up. Something always needs repair. Mines are being worked. And this is not just a company in America, guys. This is a worldwide entity, where the whole world needs this, and it has customers all over. Another thing I like about the company that I thought was extremely cool is the production of their bulldozers. When people buy these bulldozers, they last. And then they have contracts on the maintenance where they bring the bulldozers back into wherever they got them from. The bulldozer might be down for a while, and they'll just replace the parts on it. It's not like a car where they'll send one out and then you'll buy another one. These things cost hundreds of thousands of dollars, a lot of them in over $500,000, depending on its dependency and its job use. So these vehicles have a lot of wear and tear on them, and a lot of them are built to last. Always in demand. The mining industry is a hard industry. They demand specific vehicles to do specific tasks, and Caterpillar is one of the front runners in providing them type of services. Me, it was a no-brainer. Another thing is, with a lot of the conflict that we have out here right now, and this is just how I was thinking, Ukraine is getting tore up, guys. You see it on the news. All of the buildings are down. The infrastructure is in shambles in most of the country. You need these type of vehicles to fix that. And you know, usually with war, after wars comes to some type of resolution, you have a whole bunch of contractors from different countries coming in and helping to rebuild the infrastructure in these countries that, you know, were decimated by war. Caterpillar, I think, could be one of those companies, or their equipment will definitely be over there, guys. So for me, it was a no-brainer. Company has a 2% dividend. It trades at a 2% dividend. Like I said, it beat its last few earnings calls. It's in high demand. Now it's coming off of a 52-week high a couple days ago of $239. And the stock has just been on a tear. So for me, I figured I'd buy in now, being that I'm a long-term dividend investor, meaning that I hold stocks for the long run. I dollar cost average in. I've got a very small stake. I bought 3 shares because I know the stock is overvalued. It wasn't like I bought like 30 shares or something like that. I bought a small share, and I call it, you know, a stake. I put a stake in it. I'll watch it. If it keeps growing, I'll slowly dollar cost average into it. But if it drops, like all stocks should, or have some type of effect because of the economy and things like that, if it drops, it's fine with me. I can continue dollar cost averaging, drop my cost basis down, and as it falls, I'll be picking up shares of stock. It's simple. That's one thing I like about investing for the long run. A lot of this problems and a lot of the stock going up and down, it really doesn't affect me. I don't care, as long as I know I got a good company that's in my portfolio that's going to work for me and be here after I'm gone and continue to produce dividends for me. That's all I need. Like I said, in January 2020, the stock was $89. I had enough money to buy 300 shares of that. And I was sitting there, and I had it up there on my Ameritrade account, and I was like, I should pull the trigger on this. And I was like, nah, I'm going to go and buy another work truck. And I went and bought a work truck. And I didn't even need the work truck. So it's just a lot of things, guys. But yeah, I just wanted to come in today, talk about it. I mean, I got a little bit of stats. I'll go over that real quick with you guys. The market cap is 121 billion. I'm sitting here on my Ameritrade account. When you see me leaning over, I'm turning my screen back on. It's frozen. 52-week range, $160. The high was $239.85. PE ratio of 17. Earnings per share, $13.69. Let's see what we got. What else we got here? Shares outstanding, 520 million shares, so I ain't got to worry about them running out. But yeah, guys, I mean, as far as another thing I want to bring up, held by investors, 68% of institutional investors own the stock. Now, you might ask, why is that low? You got to remember, with the market dropping, a lot of companies that carry these big blue chip stocks, they have bots in place, or they have traders in place to where when the market's falling, they're cutting some of the stocks. This is one of the stocks they're cutting. You know, it's on a tear. They made their money off of it. They've held it for a certain amount of time. And rather than have their losses, you know, have losses gained, they take their gains and they cut the stock. But yeah, yeah, I just wanted to share. I brought like 3 shares. I mean, it's something small, but I mean, at $233, that's still expensive. $699. It worked for me. Now, I'll just watch the stock like I do the rest of my stocks in my portfolio. And we'll see where it goes, because I think it's going to be a serious battle in 2023 when we start really seeing the impact of the Fed's rate hikes. We'll see how it goes. But as usual, guys, I'm Stock Market Steve. I appreciate you spending the time with me as always. Hope you got something out of the video. As always, do me a favor, like, share, comment, subscribe. Make sure you hit that thumbs up button. You guys have been doing a phenomenal job with that. I appreciate that. Even if you don't subscribe, if you're looking at the video, man, just hit the thumbs up button. Help get it out. Might awake something to somebody else, or, you know, just to get the word out. But as usual, I appreciate you spending time with me, and I'll see you guys in the next video.